Hey guys, Mark here. Today I'm going to do something special, but before we get into it, I just want to say I am not a financial advisor and everything in this video is for educational and entertainment purposes only. Now before I show you guys something, we want to talk about Monday's trade. So if I just remove drawings, remove all, I could not trade yesterday on this account and today because we have a pattern day trade rule restriction. We can only trade tomorrow and Friday. Now before we trade tomorrow and Friday, we have to talk about Monday's trade. Now Monday's trade was pretty simple. We opened up lower with a huge gap and we saw this big up move, right? This tells me that it wants to fill the gap, or at least fill some of it, whether it's 50%, 100% or 25% of the gap. Once this happened, I took my trade maybe like right here, and I took the strike that was 65 right here. Now the reason why I took this strike is because 60 was giving really low premium and anything below that wasn't giving good premium, and 65 I thought, well, if the market comes and breaks here anyway, it's probably going to go down because we have such a huge bullish move in the beginning. If this was all engulfed, then most likely we're going to continue going down. So I was okay with this strike. Just a visual representation, I'll draw it right here. And then on the upper side, I wanted something above 50% of the gap, which was I think like 650, could have been 645, one of these two. The reason why I couldn't get anything on the higher side, again, contracts were really low premium and I wanted something good. Maybe I got a little greedy, but I should have taken like the 660 in retrospect, but hindsight is 2020. I couldn't tell you that price was a little risky at 645 at the time. So these were my two strikes, right? And as you can see, market did range, so the volatility not giving us good premium was probably a good choice here, because we would have made so much more money if we had good premium and higher strikes. So that's what happened on Monday. Yesterday I couldn't trade on this account, but this would have been a loser. You would have lost money on this, only because your entry is around between 950 and 10. You would lose this trade because of your strike. If you were to get in around here, your strike would have been right here or a little bit higher, and unless you got out profit down here, you lost this trade because it expired way above. So 1 o'clock, your cutoff period. So if I just remove drawings, I'm not going to go into drawings, but your cutoff period was 1 p.m. Look at that. If you took a strike right here, 645 or 650 or even 660 at 1 p.m., you were losing money. Maybe not that much, maybe you lost 60% of the value or 40 or 70, but you would have still lost, right? So good thing I couldn't even trade, right? You'll see the positions later, but yeah, so I have two day trading rules left, 2 day trading days left today, or yesterday and today, so that means it resets tomorrow. So today I couldn't even trade. So what would I do today? Since it's 10:23, we probably already missed out on a lot of premium, but I will talk to you like if I'm taking the trade right now. So the very first thing I noticed is that we did have a gap, and right now we're trying to fill it. So any strikes I would choose, I wanted above the gap because we're trying to fill this gap already. And it's already too late to get into the trade, but we're going to assume I'll tell you guys which strikes I would have taken. But my strike, I wanted above here. The reason why I want it above here is because this is yesterday's high, and let me just delete this. And we still have this gap to fill, right? So I even want my strike maybe around here where the gap fills, or a little higher, but I think 690 would be good. So right here, right? And on the lower side, I want something. What do we see? Well, we see this support here, and even lower, we could see right here was where the market opened up yesterday. So This is a really nice value. Anything below this, maybe right here, 25. And just like that, within a few minutes, I pick my strikes. No charting, nothing, right? And that's it. Now I go on the trade and I look at these strikes, right? So 690. So I'll just do an Iron Condor. And we go 690 and 625. Let's see what kind of premium we get. 180. This is good premium because we take 35%. So if you did 2 contracts, your max risk would be 630. However, we won't do 2 contracts. We want 1 contract, but we can even increase the strikes right here by 2 points wide, which means we will make about 340 to lose 650. Now let's take a look at this math real quick to see if this is a good profitable trade. So within a minute and a half, around 2 minutes, I've already figured out what I want to do. So my strikes will be this, and let's keep an eye on this number right here. So we'll do like even 350 maybe, just to make it even. And we will go to the chart, because when we take this trade at 10 o'clock, this right here, the premium right here, would probably be way better. We would probably be getting like 380, even $4, right? So we'll say 350 anyway. So we're gonna stick with 350 regardless. We would be in profit right now by like $40–50, but let me just draw the lines on the other strikes. Okay, so this would be your strikes for your Iron Condor, right? And you're making 350 now. My video is not going to show the calculator. Let's go back to trade. My video is not going to show the calculator, so I need you guys to open your own calculator and you're gonna try this math, and we're gonna see if this is a profitable trade, okay? If we were to take this strike, we have a chance of winning 90% of the time, okay? The reason why you have a 90% winning, because we take 35% profit out of the whole credit. So out of 350, we're going to take 35% of it. And on the losing side, we're only going to lose this trade if price comes below here and here, specifically right here. So we're going to lose about 60 to 8, depending on what time it comes down here. We're going to lose about between 60 and 80%. Now, on the very worst case scenario, let's say you're losing 80% of this max loss. So the first thing you want to do is multiply 650 by 0.8. That gives you 520. Please keep this number down, okay? Write it down because you're doing math with me. 520. Now it could be less, but this is the max, so we're looking at extremes right now for the losing side. That's how we want to tell if this trade is profitable, regardless of the extreme of losing. So we're going to lose 520, and on 350 we're going to make about, let's say, 35%, right? Which would be 122.5. So we're making 122.5 and we're losing on the extreme 520. You may think like, okay, well, you need 4 or 5 trades to be in profit again. What's wrong with this? Well, first of all, this strike here is not our actual. We would have gotten like $384 for this, right? But obviously because it's 10:30 right now, we've already lost some premium. So, but let's just assume, yeah, you're gonna need 4 or 5 trades to be in profit. Usually it's like 3, but let's assume it's 4 or 5. And now let's say you have, like I said, a 90 to 93%. It's usually around 89 to 93%, right? So it's not exactly 90, but I'll say 90 because it could be 93, 92, 91. So we'll do an average of 91. Now, so let's multiply the 122.5 by 0.91. So on average, when we include losers and everything, well, we haven't included the loser yet, but on average you're making $111 per win, right? And per loss we do 520 multiply by 0.09 because we lose 9% for that 520. So on average we're losing 46.8. So remember those numbers, 111.47 and 46.8. So let me just, now what I'm going to do is I'm going to subtract 100 and, what was it? 111.47 subtract 46.8. Was that correct? Yeah. And that gives us a value of $64.67. But you pay a fee of like maybe between $6 and $8. So we'll say on the extreme side $8. So you're making 56.67 in the long run, okay, after fees. Now if you multiply that by 100 trades, you're making $5,667 in 100 trades. That's after you include losses and everything. So yes, this would be a profitable trade to take. Now, another thing, because you're losing like $500, $400, then obviously you want a balance of like 5,000 and risk 10% because you have such a high win rate. You're not going to be losing 9, 10 in a row to lose your balance, but if you did, that's fine because trading is risky and you already know your risk and all that before you get into trading, which is the money you deposit. However, if you started with a $5,000 balance, in 100 trades you've already doubled that, okay? And with such a high win rate, you're not going to be stressing out. Okay, you're going to be doing this stress-free because you're not going to be worried about losing. Yes, the losers will come, and yes, you will take a loss every now and then. But with such a high win rate and with the expected value and the odds being in your favor, you're gonna win this way more times than you lose. So you're gonna be racking up all the wins. $5,667 on average is in 100 trades with a $5,000 balance or higher, because you could do 10,000, 20,000 in 100 trades, which is like what, almost like 4 months ish, around there, around 4 months, just over 4 months. 100% returns in every 4 months is crazy, because when you do this, if you had 5,000 and you did this, the next, you could now double your contracts to taking 2 contracts, and all of a sudden you're making 680, right? Well, 35% of 680, right? And so the more you grow your account, the more you compound and the more you make. And anyway, so this was kind of like A to Z of how I take trades. And as you can see, the market is just doing up and down like we predicted, right? But we would have gotten in this trade around 10, right? 10 a.m., which is this candle right here. And look what it's done since 10 a.m. Nothing. By 12-ish, this trade should be closed, maybe by 1. Contract premium would be losing at a faster rate, but because we have FOMC, like look, within the past 5 minutes that I've been talking, it's basically going down 15 now. Obviously there's spread, so it's going to keep jumping up and down, but look at the value it's losing. Every 15 minutes it loses like 15 basically. So if this had been 10 o'clock, you would have started with like, what, 380? You would have already been in profit by $40. And as the market continues to do this, by 1 p.m. you should be out, but if not, then within an hour or so this should be hitting take profit, right? So how you would know if this hit take profit is when you take this trade at 350, you're going to basically set it to buy back at 245. So when this becomes 245, it would take your trade out immediately, which would be good for you basically. But yeah, so that's all I wanted to talk about, guys. I hope you have a good day, and I will see you tomorrow. So tomorrow I will be trading. So the video I post tomorrow will be a trade for that day, and I hopefully will give you more insight on how I trade. But this is a very good video explaining how I take my strikes, how I pick my profit, and how I calculate the probability. And please make sure you're always doing, when you trade options, make sure you're always doing the calculation for the expected value, because if your expected value is negative or isn't above like $50 or $40, there's no point in taking that trade, because you're going to be, in the long run, you're going to be like break even or not making any money, you know what I mean? So make sure your EV is really good and it makes sense for that trade that you're taking. You understand? Alright guys, I will talk to you guys in another video, and if you have any questions, just leave in the comments or message me on Telegram. I will leave my Telegram below in the description, and maybe soon I'll start a Discord and we could talk about trading and stuff like that. Hope you guys have a good day.